It is the single most infuriating thing that can happen to you as a day trader. You do your analysis, you find a beautiful setup, you enter the trade, and you place your stop loss exactly where it is supposed to go. The market moves in your favor for a minute, and then it pulls back. You watch the red candles creep closer to your stop loss. You hold your breath. The market drops, touches your line by a single tick, triggers your order, and takes you out of the trade for a loss. And then, within a matter of seconds, the very next candle turns bright green. The market violently reverses. It shoots straight up. It blasts past your original entry point, and it flies directly into what would have been your take-profit target. You just got stopped out at the absolute exact bottom. You stare at the screen. You feel this hot, burning sensation in your chest. It isn't just frustration. It is a deep, primal sense of injustice. You hit your desk. You say out loud, "I knew it! I was right. The market just wanted my liquidity." And what you do in the next 5 seconds is going to determine whether you survive in this business or whether you blow your entire account before lunch. If you're like 90% of retail traders, the pain of being right but losing money is simply too much for your ego to handle. You cannot let the market make you look like a fool. So, your hand violently jerks back to the mouse. You don't analyze the new chart structure. You don't recalculate your risk. You just slam the buy button at market price to get back into the trade. You have just entered the re-entry meat grinder. Because you bought in a panic, your entry is terrible. You didn't buy a pullback. You bought the absolute top of that massive green candle that just stopped you out. The moment your order fills, the algorithm does what it always does after a sudden, aggressive move. It breathes. It pulls back. But because your entry is so high, and because you are already trading on pure emotion, this normal pullback feels terrifying. Your screen immediately flashes red. Where is your stop loss now? You don't have one. Your original, logical stop loss is now 50 points away. If you put a stop there, you are risking a massive percentage of your account. So, you just hold it. You grip the desk, staring at the screen, begging the market to push a little higher so you can get out at break even and prove you weren't an idiot. But the market doesn't care about your ego. The momentum dies. The trend rolls over, and it stops you out again. You look at your daily P and L. You started the morning with a disciplined, normal paper-cut loss. You did everything right, but the market just happened to wick you out. But because you had to prove that you were right, you re-entered, and you just turned a normal paper cut into a massive account-crippling loss. You didn't get beat by the market, you got beat by your own spite. Why do we do this to ourselves? It comes down to a fundamental misunderstanding of what the word right actually means in the stock market. When you get wicked out, and then the market goes to your target, your ego screams, "I was right about the direction." No, you weren't. In day trading, direction is only half of the equation. The other half is timing. If your direction was correct, but your timing was wrong, then your trade was wrong. You don't get partial credit for guessing the direction. The market does not hand out participation trophies to people who had the right idea, but the wrong entry. When you say, "I was right, the market was just wrong," you are separating yourself from reality. The market is never wrong. If the chart hits your stop loss, your idea is invalid. Period. The re-entry meat grinder is incredibly dangerous because it is driven entirely by revenge. When you re-enter a trade immediately after getting stopped out, you are no longer trying to extract money based on a statistical edge. You are trying to punish the market for hurting your feelings. Think about the math. Your original setup had a beautiful risk-to-reward ratio. You were risking $100 to make $300. When you blindly hit the buy button 5 seconds later, the market has already moved. Your new entry is higher. The target is closer. You are now risking $300 just to make 50. You are taking the worst possible mathematical setup at the exact moment your emotional stability is completely shattered. And the sickest part? Sometimes the revenge trade actually works. Sometimes you slam the buy button, the market miraculously keeps rocketing upward, and you make your money back. You feel like a genius, but that is the worst thing that could possibly happen to you. Your brain just learned that when you feel pain, the solution is to blindly gamble. You might get away with it today, but eventually you will revenge buy a re-entry. The market will drop like a stone, and you will hold it all the way to a blown account. Winning a revenge trade doesn't make you a good trader. It makes you a lucky gambler, mathematically guaranteed to go broke. So, how do professionals survive the frustration of getting wicked out at the exact bottom? They completely detach their self-worth from the outcome of a single trade. When a professional gets wicked out, they do not get angry. They look at the chart and simply say, "Fascinating. My timing was slightly off." They journal it, adjust their strategy, and move on. There is no drama. Because they know this one specific trade means absolutely nothing. It is just one data point in a series of 10,000 trades. If you want to stop bleeding your capital in the meat grinder, implement a hard, physical rule starting tomorrow. The one-strike hands-off rule. If you take a trade and it hits your stop loss, you are physically not allowed to touch your mouse for the next 5 minutes. I don't care if the market instantly reverses. I don't care if it looks like the greatest setup in history. Take your hands off the desk. Sit there. Feel the FOMO. Feel the anger. And simply watch. By forcing a 5-minute pause, you give your logical brain time to shut down the primal, revenge-seeking part of your brain. Stop trying to prove that you are right. The market doesn't care. Your broker doesn't care. The only thing that matters is protecting your capital so you can survive to trade tomorrow. If you have ever turned a paper cut into a blown account because of your own ego, it is time to change how you operate. If you're sick and tired of watching your account bleed out because you keep making the exact same emotional mistakes week after week, it is time to stop the cycle. You do not need another magic indicator. You do not need to buy a brand new strategy. You need to fix the deep, toxic, psychological traps that are actually keeping you broke. Hit the subscribe button and join the market survival community right now. We are stripping away the ego. We are building the iron discipline it takes to actually survive this industry, and we are treating trading like a real business. Protect your capital. Master your mind. I will see you in the next one.